Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We are recording here on Friday, Good Friday, April 15th. My name is Ben Maldonado, and as always, I'm here with my partner, Barrie Hederachi. How are you, Barrie, on this Good Friday?
I'm doing pretty well. Nice to have a day off.
Yeah, where we catch up on research and paperwork and all the other garbage. But the market didn't take a day off this past week. I'll tell you, when we post the videos, we also post a link to an updated spreadsheet. And we were talking before we started recording here that of the 16 markets we follow, 12 changed levels. Mm-hmm. And that's pretty significant. That means there was some movement, enough movement this past week to shift on my dailies by at least a half square in 3/4 of the markets we follow. So we'll get to that action and discussion after Barrie reviews the big five and we take a look at Bitcoin here. Well, Bitcoin, as a proxy for risk, as I like to call it, was looking pretty good a couple weeks ago, and boy, has the tide turned. Mm-hmm. We made that little high late March, early April, right into the teeth of this overhead, and we failed pretty badly. We came down, spent a little time, dancing with this full square, and now I've given it up. And the last, 3-4 bars have been completely under the square, which points to heading lower. I mean, odds favor that, we're going to go down and we're going to test this, 33.5 level. And if we lose that, then the magnet becomes, around 25,000. So as a proxy for risk, it's really saying there's the appetite for risk is not so big right now because Bitcoin to me looks lower. Any difference of opinion there or anything you want to add on the Bitcoin chart?
No, I think it looks weak. I think we're in the middle of a third. If you take that high cycle high as the first, we had 1, 2, 3. No, right here, the one we had in April high. Mm-hmm. I'm just starting a new leg there.
I see. Yep.
Right. That 1,
2, 3. Yep.
And so we'll probably do it maybe a complex 4 and I just can't see those lows not getting tested, like the February low or the January low.
Yeah, in here.
And if that gets tested, then we get to see.
And bigger picture, if this is just the 1 and this is a 2, that means we're starting 3.
Right. So there's a lot of larger patterns happening here, and like we always say, the key was that square and the cycle. Your 69-day cycle came in perfectly. So
yeah, really nice.
Now we wait.
Now we wait and see. Just we know that the weight of the evidence when we're below this full square is to the downside. So let me kick it over to you, and you can review the big five, and we'll see what happened this week in that land. There's the mini.
There it is.
Every time I see that chart, man, I just look at that timing and go, that timing was really good.
Right here, yeah. Right. Yeah. This is that came in nicely, and with the really good follow through.
No question.
No tricky business up here. Very clean.
Yeah.
Unlike this low here.
Right.
Well, that's what they say, right? In markets always make clean highs and very sloppy lows, dirty lows. So that's looks like that's what's happening. All righty, let's take a.
We're below the box.
Yeah.
And the box is looking like a coffin for the bulls if they can't get above it.
That's right. And we were focusing, I know, really only had one number for last week. It was 44.50. And you can see what happened there, right? We came down through it. And the last 3 days, we tried to bump up against it, trying to get above. We couldn't. So that was it. And then we basically, Thursday, we just reversed and went lower. Now, 44.50 is still important. But I think unless something miraculous happens and we take that out and settle above that, looks like we're going to go up and visit this 42.75 area. Mm-hmm. And once we get there, we'll have to probably do another show to see how we map it out. Depending on how fast we get there, the next sort of pattern, how it unfolds is, we can have multiple sort of pathways to how it's going to unfold. So for now, we're in a weak position below 44.50, and looking at this 42.75 area being next support area. Okay. Which, it's a decent 100-point move there.
Pattern looks really similar to Bitcoin, doesn't it?
Yeah, it sure does.
The overall pattern.
Different cycle, but the pattern's similar. Yeah.
Yes.
So the two numbers, basically 42.75, 44.50. That's it. And just to take a look at our, the 4 hour that we've been following, and I've been posting these on Twitter just during the week, just to keep the charts fresh. And if you guys haven't been following the story, I'd say go back and, check a few, 3 or 4 videos back and come forward. That way we have the whole story here. We've been doing this, following this chart since this low came in, and I've been posting it. And it's really helped catch the, the legs off of the 4 hour chart from here, the check back here, the resistance, and then check back here, resistance up here, support, resistance here, and losing this. Oops, let me get that back. See what happens when the markets are closed on a normal day.
Right.
So it gets all weird. So we had support here, took out the support, drop. Here's the recheck and failed. Went down to here, and last week was basically, we were just kind of hanging in here, the box that I drew up. And the way the pattern is looking, it's soft. It's getting weak. And so the key here is, we can't really get above this, and we can kind of use that 44.50 area for reference. And if we get through these lows, it's straight down to the lower line, and that's 42.80 here, as we saw on the daily chart, is 42.75. So within 5 points. And the funny thing is, there's no relation. These are all different kind of charts, and we're getting these levels with different methods. Anyway, so that's just the beginning. If we drop here, and then depending on how we resolve it, we'll have to talk about that next week. Then we could certainly go lower. So, but we're getting into an exciting sort of area, right? Because look at all the drama we had in this level before. So we're going to go back and test it. Now, again, if we, for some reason, somehow be able to get on top of 44.50, then we have to deal with it in a different way. We'll have to adjust, right?
No question.
Anything else you want to add here on the daily?
No, just that it looks like it could be entering a fast move lower on off that lower high that we just put in.
All right, let's take a look at the weekly E-mini. Not much to add. When we had this 1, 2, 3 bar pullback up here, we talked about the low of the high getting taken out. If that got taken out, then we can probably expect weaker conditions. And once we did that, that's kind of what happened. So
it played out very nicely.
That played out very nicely, and we have these other lows that got taken out. Now it just feels like little heavy. So on the weekly basis, there's really no support here, anywhere in here. We're probably, we have to get back down here to retest it. We'll see how it works out, and just rely on the daily for the shorter term support resistance. All right, let's move on to bonds. We've been bearish.
It's been relentless, hasn't it?
As far as I can remember. And, it's doing well. We had our little meetup at the square 72. Really couldn't hang above it. Sold off, and we had this 140 as the next support area, and we're almost there.
Almost there, yeah.
It was really around, I think, when we look at the weekly, it's like 138, 140. So we'll see that as the first sort of support level. And if you take this up here and look at it to really get down to the next main square would be 216 coming off the high. And that puts us around 137.
Mm-hmm.
So 137, 138 seems like the next logical spot. We'll see how we gets there. And if you look at a weekly bonds, you can see we came 90 down. We've been talking about this target for weeks and weeks, right? I think ever since we broke it up here.
Mm-hmm.
Last December, I've been talking, hey, listen, if we can't get above this half, we're going to probably go and visit we did the 90-degree level. And at the time, I don't think anybody would have believed it.
No.
And how classic, right? We had the triangle, broke out, came back for a perfect kiss from below, and here we are. That was in a hurry. Now, the speed that we came in on, I'm just not so sure if we're going to just stop on a dime and rally off of this. So we'll deal with this 140 area, and just looking at the weekly 90, unless there's another square that's working, this vibration here, it just seems like we have more to go. Mm-hmm. And that opens up this entire, the lower 20s.
Certainly, if it gets stuck below that full square, man, you got to look out, because not being able to stop at the 90 is a really bad sign.
That's right. But it's a good sign for us. It's a good reference because we know what happens when things can't, hold above.
They can't hold.
72. Yeah. You can see how, we couldn't hold above that. Couldn't really hold above the half, came down, retested, came off to 72, had a quick bounce, retest, and then look at even here, right? We had this one bar and then failed. Mm-hmm. So this 141 was the first, it's a quarter going into the next square. Yeah. Mm-hmm. And that's where we got that. But looks, the speed is coming down. Looks like we're going to go a little lower. So for now, since we're on since the dailies are pretty much getting very close to our target. So 140, 138, that's the area. For now, I think it's okay. We're it's weak. But when price gets those levels, keep an eye on it. It's a good place to sort of tighten up not even tighten up. I think it's a good area to take some profits, because
it's not the place to be initiating shorts. That's for sure.
No. So we'll work that forward as we go. For now, right. It looks like, we're going to get down here and maybe consolidate a little bit. So we'll have to deal with that. We'll deal with that after next week.
Yep. You've been all over the bonds. That's been a good call.
Yeah, and it's basically down, and we're just looking for some support in the upcoming, when we meet up on these levels. So not much to do other than stay the course.
I mean, in a market like this, what we usually do is, we know the direction. So you're just looking for spots to short it, right? Find retracements, find, bounces into resistance, and then you get short. The trend is your friend, and it's down.
And, the way we talk about, sort of cover our show, it's a reflection of how we trade. We're kind of swing traders. We're active, and we're not the ones to put a position on up here and just sort of go on vacation, right? So,
right.
So when we talk about these, and we do have a shorter sort of a window, and we deal with it in shorter legs. Now we do look at the monthly once a month. Ben does the show. We look at the bigger picture, but in the meantime, you can. This show is really about managing the shorter trend in the shorter term, mm-hmm. and it's easier, at least for me, and I think it's for you. You're a little bit more longer term oriented, but
sure.
It's easier for me.
Yep.
And
that's why we make a good team.
Yeah, it makes a good team. Yep. Yes. And I just realized, last week we forgot to tell people to click like and share and everything. So just wanted to remind everybody. It's funny, if you don't mention it, it's always a few less. And when you mention it, people remember and get a few more likes. And sure. It's important, for us to keep building and for inspiration. So if you guys like it, please click like and share with others you might think could benefit. So
it definitely motivates us to do more shows. No question about it.
Yeah.
Getting that positive feedback.
Kind of doing it for fun, right? It's more fun if more people are involved.
Right.
No question about that. Anyway, we're done with bonds. Let's take a look at crude.
I put a tweet out on Crude this week. I said, "Hey, it's time to pay attention. Things are starting to firm up." And man, did it respond.
Yeah, well, how about these boxes, eh? And
Nice.
so we came down into support. That was, this is the area it was supposed to hold. And coming off of this, we were looking for some kind of strength, and here we are. And the two levels we gave out last week, 97 and 102, looks like we're doing pretty well above those.
Mm-hmm.
I don't have any upside targets for next week. I just think if we can clear this 90, right, we're going to be, we could, God knows where it could go, but we're definitely moving higher. But because we did hit 90 going up here, it's possible that we get a little bit of a pullback, kind of a recheck, maybe a recheck off these levels here, or recheck up to 102. So
and if they hold, that's a hell of a nice setup.
Yeah. Yep. And the other thing is, just remember, these markets don't go up every day. So, and normally when a retest or a consolidation or counter trend happens, it's coming off of some kind of resistance. So we're at one of those levels, we're 90 up from here. So it's possible we get a little bit of a correction or consolidation and then move higher. But being that we're at 107 and this area is, we have 90 up from this low, I would pay some attention to it, right?
Mm-hmm.
So you can see it's also
half square.
Yeah, half square. So we're definitely in an area of resistance. So so a normal, some kind of a correction or pullback is not unexpected. Okay. All right. Let's take a look at the weekly crude. Now this chart every time,
that square is good, man. That 90 is good.
Yeah, it's rock solid, man. I mean, can you imagine trading without this stuff? It's like I'd be
it was lost.
Just well, not at this point, I just couldn't. But anyway,
right.
So look, we were looking at this 90 for key support, and the story has been that if a correction can hold above that, it's on firm ground, and we can expect the market to continue in that direction. And we got that. We had a 2-week correction after that first counter trend here, and here we are. We're back up. So on the weekly basis, the weekly charts, I would say, as long as we're above the 90,
which is that's your 97 area, right?
Yeah, it's a 97, 95, 97 area. As long as it's above that, we're in pretty good shape. So that's and the pressure is to the upside. Next, let's take a look at gold. So we also had a box in gold. 1915 and 1940 was the boundary. And of course, what I said a few weeks back was, above 1915, we're going to be on firm ground, and above 1940, we can expect a little bit of a stronger market. And that's kind of what we have here. Well, I wouldn't be selling this.
No, nope. It looks good. I'm going to talk about that one too.
Okay. And looking at the weekly, again, here's our weekly box was 1881 to 1919, and we held well above that week before that, and here we are. We're moving higher. So on the weekly basis, we have 2,000 as a sort of a target, and then 2,100 for this leg. So trading to the upside. That's all I can say.
Gold looks good.
What I'm noticing is when the markets are all trending, there isn't much to talk about. It's just, I feel like I'm not really saying much. What I'm saying is the obvious. So,
right, which is get in, right?
It gets a little boring, but it's a good time to trade.
That's for sure.
Not much drama, right? So here's the dollar, Ben. How about that?
It's arriving at the target you put many, many moons ago. You said it's going to 101.
And we're just about there. Almost. So now the key is, we did the 90, and this is a really important level. And not that we're going to hit this and get into some kind of a bear market. But the key thing to watch here now, ever since we looked at this 90 going up, this is back in 2021. The idea was, first we normally look at the half square. How are we going to do there? We retested here, early this year, and continued higher. Not a full-blown bull market. It's a little sloppy, but sloppy bull market, right?
Mm-hmm.
And we made it to target. That's the main thing. We finally got there. And now, so all this time it was just purely trading the trend. Now, when we get to the 90, we have to pause a little bit and say, okay, look, a lot of things can happen here. The key thing is, can we continue to go higher, or are we going to turn down? So I think 101, the key, what I'll be watching here is to see if price can settle above this level, above I say 101. Let's say this, you can see this is 100.5 is the 100.5 is the level, 100.5. So if we can get above this level and hold above, then I would say there's more to go. We're not done. So what I'm watching next week is to see, are we going to hold above it, or are we going to start, consolidating below the level, and that'll set up the next leg. And so that's how I'm going to leave it for next week. We're almost at the target that we've been watching. So let's see what happens. So if you've been long, start taking a look at all the positions and, on the other currencies, and see where things are with your work.
Yeah, I mean, that's a perfect example of how to use a square, that whole run, right? Because you started in early 2021 at the low, went up, came back, didn't even make it back to test the square, right? You held the square, got up to the half square, got through it, tested it, and then made the assault to the top.
Right.
And you basically traded every half square. You're making decisions.
That's right. Yep. No, it's good trading. It's just great. Dollar's been, and let's take a look at the weekly just to see. Always gives you a better perspective. And why are we talking about yellow flags? Well, because of this. It's the same 90, but it's a lot better sort of visually. It's more appealing, right? You can see a little bit better. And so this is no joke. So we are at a critical point. You can see how well we got above the halfway square, 50% retested it, and we blasted off. Actually, weekly looks a lot better, right? It doesn't look that sloppy. Well, a little sloppy here, but it's very clean. And well above a 41 by 1. So this is a strong dollar. To say, now the next key is to see if are we done here, or are we going to go much higher? So
yeah, can we get on top and stay on top? That's the question.
That's the question. And so the key now is, like I said earlier, is to see if we can settle above or below that level, and that level being 150, 100.5 or 101 is really the level we want to settle above. So for next week, I think it's more of a pause for the currencies. We're going to see how it settles out, and then we'll deal with it. We'll get back into the story after we see how the price action looks. And while we're here, let's take a look at the euro. We talk about the strongest against the weakest kind of a play. Eh? This has been a really good.
It got to your 108 level today.
Yep. And looks like there's a little bit of space left here. Why not just watch this thing down and be done with it? So basically, this, we're going with the opposite of the other, and we'll see how it works out. I still think this is weak, and maybe there's a little bit left to go to the downside. And if this area cracks, that means the dollar is cracking the weekly 90
to the upside. Yeah.
So that's going to open up entire down leg over here, right? And we did break a major trend line in the euro here. Look at this.
That's a 6-year trend line.
Right. So it looked like it was going to hold here, but then it broke. And that's not looking very strong. That's not signaling a strong market. So this could continue to be soft. Again, I don't really have anything bullish to say at this point. We just have to wait and see. And in the meantime, dollar strong, and look, 90 down would get us down into 105. So,
105, 106, yep.
Yeah, and that's still not taking out these lows. So if we're going to get to 105, I mean, look, probability of this going is very high at this point. So I would stay on the watch your trades on the short side. We'll see where it goes. We can cover it, pick up on that next week. And looking at the daily euro, we had this 108 as a target for a while. And we left off by talking about this 144-degree square. And if we can get above and hold above that, we can expect a stronger euro. And, last month, was the month before, during March, we tried to get above. This was a really nice retest. And we were looking for a test of this zone up here, the half square, at least the box, the resistance zone, and to turn back down. And we kind of, it held above this, got up to the lower boundaries of the square, of the resistance zone and failed in a big way.
Mm-hmm.
And the big fail was really not being able to hold above it on the way back down, right? In fact, if you look at it,
it even tried closely, to retest, didn't it?
You can see we broke it, and 2 days we were trying to bounce up against it, we couldn't, and then we failed. So now we're down at the target. What's funny is, the dollar is at target to the upside, and euros is at target to the downside, and target being this 108 we've been talking about.
Mm-hmm.
So clearly, it's a time to pause and wait for the pattern to resolve. Staying down short is fine, but be careful here because we're at an important price level.
Mm-hmm.
Okay. Well, I think that's all I got to add.
Excellent review.
Thanks. And the other thing, we had all kinds of news in the air, just endless fire hose of news. So I was telling somebody the other day, they were, and the other person wasn't, they're not really involved in the markets actively. And they said, wow, how do you keep up with all the news? And I said, well, I really don't watch the news. And then I realized, a lot of people think that you have to follow the news to trade. And then I realized my basic approach is, the more chaotic news and the external events get, the more I lean on the technicals.
Mm-hmm.
And if you look back, no matter what kind of chaotic period we've been through, you'll see the technicals hold up under all conditions. So we're in one of those periods, and I think it's going to be like this for a while. And the way to survive is really to lean on the technicals and not get emotionally involved or, trying to do it with being right about the news.
It's a perfect validation of that old saying, first the pattern, then the news.
Exactly. Yeah. Yep. Pattern will get fulfilled somehow, whatever
That's
the
right.
news is.
That's correct.
Anyway, all right, let me put it back to you. We'll finish up the commodities.
First, let's start with another one of the risk markets, which is NQ here. We looked at Bitcoin. Bitcoin looks weak. Barrie made the case on the ES. ES looks weak. And NQ is really has been leading the way, both on the upside, it was leading the way, and now on the downside, it's leading again. And as you can see here, it's just super weak. And this chart's been great. This price action here at the high was classic, right? We tried, failed, and then it let go. Well, we did it again in a smaller fashion, in a quicker fashion, right? Off this super steep bear market rally, comes right into resistance, tries a couple times, fails, comes back, tries for 2 days, fails, and now here we go, and we lost the full square with Friday's close. You can see the close is under the square here. So NQs are weak. They seem to be leading ES and the S&P. So I think, minimally we're going to go down and test these lows. And with the way the pattern is unfolding, in my work right now, probabilities favor we're going to take them out. Just looking at the square, as long as we're under that full square, the pressure is to come down and test this half square in the 13,000, call it 13.4 area, 13,400. And if we lose that, then it's the full square. and the full square is around 12.8, 12.7. It's weak. It looks weak. If you look at some of the subgroups, the semis were super weak. So not much you can say bullish about this until we can get back above and hold above this full square, which is, right around 14,000, call it. Anything else catch your eye on the NQ chart, Barry?
Well, I think always have to watch those levels, just like we're watching the 450. You need to watch that full square because, no matter how good our levels are, it's still trading. Eh? So watch for price action to see if we can get above that square that you have there, the lower square or not. And clearly, if we get stuck under that, we're going to visit the next full square. So,
agreed.
Yeah,
it's looking, just putting the pieces of the puzzle together with Bitcoin, NQs, and ES. It is looking like it's risk off time for those markets. Doesn't mean it's guaranteed. Doesn't mean it's 100% chance it's going to happen. It just means the weight of the evidence is pointing to weakness right now. All right, let's go look at commodities, because this is the first time in a long time we've got, half a dozen or 7 or 8 commodities to review, because the charts are starting to kick up again. First one we'll start with is wheat. Everybody knows about wheat and the monster move on the Russian invasion of Ukraine. These little dots here were the limit up days we had, where there was no trading, just automatic opened up, limit up, and just stayed the whole time. The good news is, even in a massively volatile market, look how beautifully the squares have done. On the way up, this was a high. We settled on top of it, caught the high here, which was again in the middle of the beginning of the war. We've had a sharp pullback. Now, a couple times we tried to get above this square. Well, last week we forgot 3 full bars above the square. So that's what has me thinking, okay, this thing's ready, getting ready to go again. As long as we stay above this full square, which is in the, let's call it 1066 area, this is a bullish market. The other thing I'll point out here, the pullback low, look at that in relation to the November, December highs.
Right.
Huge gap between those, right? You would think you could come all the way down here and still be bullish. And we were roughly $100 higher than this at the low. So the market remains bullish. This new development of, getting multiple bars above this full square has me very interested in the long side again, and thinking the correction, this sharp pullback and correction of roughly a month and a half may be finished. So wheat is one that is now on the radar again. Corn we talked about last week, and the results of the week were very, very favorable. We said, we did this ABC down, little false break of the previous lows, popped right back up, and then stayed above the square. And this is where we were interested and wrote about it and spoke about it last week, that, hey, corn looks like the correction is over here and we're ready to go. And lo and behold, we pushed up to a new high, closed over the full square. There was a little bit, the lows were slightly below the square, but, not grossly below. So this thing looks like it's ready to go up and at least test the half square, which is over 800, like around 812. And then if it does well there, you're looking at the full square around 840. This was a violent chop, if you will, and just was chopping people up. But, this false break and ABC was the signal that, hey, things here are looking bullish again, and corn is looking to take off. Anything else you have on corn to add?
I would say stay the course.
Yeah, it looks bullish. I mean, the other thing to notice, and I think we talked about on a previous video, but this is really important from a structural standpoint. Look at where those lows were.
Yeah.
Of that whole correction, right at the highs from April, May.
And the full square.
And the full square. That's called stacking the odds in your favor
Mm-hmm.
when it lines up like that.
And if anybody's watching these, it's great to go back and look at the episodes we did around those moves, and I think we pretty much called out every turn on these.
And it's not that we have a crystal ball or anything. It's just that we look at when looking at the market with these squares and the structure, it just gives you the outcome that has a higher probability, right? When you're on top of a square and you're on top of previous structure, it's not a guarantee that it's going to go higher, but it gives you the higher probability that that's going to happen over something else.
Mm-hmm.
And that's the way to trade. Here's soybeans. Soybeans was kind of, lagging the group a little bit, but again, look at the correction. Look at how the highs were caught. Look at how we caught the move here, right? The pattern repeats, right? When you see bars when you get above and then you start getting bars that can't get below the square, that's the signal that, hey, the move is coming. And it happens all the time. It repeats. When you get these spikes like this, that's like perfection, which doesn't happen all the time, but it hits, turns, and goes. And once we saw this a week ago, we said, hey, it's time to pay attention to soybeans. We really want to watch this because, we got the support here on the full square on top of these highs here. And in this area here where highs were made before, probabilities favor that we're going to head up, and soybeans started moving up. It's doing what it needs to do, right? First, it battles with the half square. Friday's bar completely above the half square. Another bullish sign. We can get the next bar, do the same thing. You just keep increasing the odds that it's going to push and test these highs and most likely break out. So I like all the grains right now. As you know, after the spike during the war, we said, hey, it's time to just step aside, let them do their corrections and consolidations. They may just burn time off. They may pull back. We don't know, but it's time to watch. Now it's time for action in these markets again. Anything else to add on the beans, Barrie?
Well, I think the stronger part of the move will come after this sort of fourth wave-ish chop gets done, and which would mean taking out that trend line and maybe settling above the half square, and before taking out the full square.
Mm-hmm.
That's when that's going to be fire. For now, it's sort of backing and filling and getting set. So
this is my style. I like to get in as early as possible, and that's when I bring them up, right? When I see
mm-hmm.
the pattern forming, there's a little less extra risk in doing that, because as Barrie said, the real move happens, when you take out this trend line and then you get up here and take this out, then we take off.
Right.
So it's just different styles.
But that half square is the key that to watch for now.
No doubt. Right there is the key.
Mm-hmm.
Staying above it, and then, at any moment you could get that move higher. If we keep crisscrossing it, you're going to have to wait. So that's the grains. They all look good. Again, it's time to engage on them. Let's move to the metals. Here's gold, one that we've been bullish on for a while. Barry's been bullish on it. I have as well. And the pattern here, if you remember just looking at the grains, all of them, all these commodities are doing a variation on this pattern where they spike up, pull back, do some sort of fourth wave or second wave, depending on how you're counting, consolidation, and then they get going again. That's what we're seeing here in gold, right? And to me, because we're holding above this half square, we're holding above this, 6 to 8 month consolidation in terms of price on these pullbacks, and now we're starting to stretch out and test this full square. The odds favor this thing's going to go, and we're going to take out these highs. The first task is to take out the full square, actually clear it. For 3 days last week, we crisscrossed it, closed above it. So we want to see some bars, some full bars, stay on top of this to let us know that, hey, liftoff is coming. But the odds again favor it's bullish. The pattern has this curl that we talk about, right? Where you start making higher lows and higher highs. And then the momentum starts kicking in, and that's when you get the spike and the big acceleration. So I think gold looks good. I think it's ready. I know you talked about gold, Barrie, but there's anything else you want to add based on this chart?
Well, I think, anytime, well, personally, I get all bullied up about a market, which I am with gold. Not bullied up, I should say. I'll get all bulled up.
Right.
I'm always, you got to be cautious a little bit here. So that's why I use these levels. So I would use that full square as sort of a line in the sand, so to speak, to see where we settle. And we keep saying that about the lines, and that's just what it is. And that price holding, that the initial pullback above that half square was a key. Now getting positioned there, when you come up to the full square, you have to kind of really watch your positions to make sure that we continue that. So I think, sticking to our approach, you have to go square by square. So I think we're at a place where we can just break to the upside or come back and kind of rest a little bit, and maybe into that trend line you have there. But I'm just saying, you have to kind of still look at everything, even though everything looks fully bullish into the moon. So I would watch those things, but other than that, it looks good. I think the odds are, like you say, odds are to the upside. And once we can settle above this line, we're pretty clear to the upsides. Not a whole lot going to hold it down. So
no, not when it's been consolidating for 18 months like this market has.
That's right. And it's very healthy, right? It's healthy. It's not acting crazy. It's just very deliberate, and it looks good. I like it.
Signs of accumulation. That's what I see.
Yeah.
Let's go to the next one. Silver. Silver's in a very good position as well. Again, sideways. This one had a real sideways correction for 18 months, 20 months. Started making higher highs and higher lows. Last week, 2 bars settled over the full square, and that's a very bullish sign for this market. That's call it the 2550 area. I think silver's ready. I think, like gold, all we need is the match to be lit for whatever reason. You watch these markets during the day, and you see in the morning they're down, and then almost always the last few weeks, all day long, they get bought up. And while it may still close down on the day, it's well off its lows, or sometimes it actually closes up on the day. So these markets are in accumulation. Silver sitting on top of the full square, which also, as you can see, sits on top of this price action from the last 8-9 months, and that's bullish. I'm thinking we're going to real soon test the half square, which is around 2750. Clear that, it opens the way up to 2930 area, or around $30. So silver looks good to me. I know you like silver as well. What else can you add here?
Not much to what you said. I think it's just a matter of time. Everything else is okay.
Agreed.
Yeah.
Let's look at some energy stocks now, because the energy's kicking up again. Barrie talked about crude. I concur 100%. Here was the day where I said, okay, folks, we need to start looking at crude again. Made the spike high into the full square with the war news, like a lot of commodities did. Pulled back to the half square here, rallied up to this half square. And then here we did this beautiful little trick called a false break right on support. It was slightly lower than this low, right on the half square. And that's when I said, hey, time to pay attention. Once we reverse this the next day, time to pay attention. And lo and behold, we went up and pushed above the full square. So now we're watching to see, do we hold the full square on a pullback, which on mine is around 104.40. If we hold that, super bullish. Obviously, we could pull back to this trend line. As long as we make a higher low than this here, it will still remain bullish. Mm-hmm. So I think crude, I think the sharp correction is over. It's just a matter of, are we ready to rip higher now, or do we need to do a little, basing here above this full square, or come back and test this trend line before the launch happens? I do like crude now, again, focusing on it, looking for a good entry, looking for a spot where the risk reward and probabilities favor the move higher. So crude looks good. Here's one that I wanted to show, not to brag, not to boast or anything, but to just show.
But you don't get chances like this often.
But just want to show what can happen, right? When you stack the odds in your favor, stuff like this can happen, right? We were talking about buying crude, and you can go back. This is not bullshit. This is not, us post facto trading. Go back and look at the previous videos 2, 3, 4 weeks ago.
Or 5 or 6 or
right.
7.
We brought nat gas up because, we rode this up. The sharp correction happened. It rallied up, and then the pullback came on top of the full square here. Okay, that's the first sign. Hey, maybe something's changing. Higher low, full square, rallied up, failed, came back twice, tested the half square, couldn't get below it. That was when we started saying, hey, time to pay attention, people. This looks like a market that's ready to move higher. And then you get this. Again, it's no crystal ball. It's no magic. All it is looking at the pattern and the structure and what are the odds. And when it does certain things, the odds begin to get stacked in your favor. And that's what happened here with nat gas. Now, I wouldn't be buying it up here. As a matter of fact, we're probably closer to the end of this leg if you're playing short term than near the beginning. There's weekly resistance in like 768, monthly resistance around 770, and you got your full square resistance up here at around 750. So it's not a place to buy. It's just an example of reading the pattern, using the squares, and then getting involved when this can possibly happen. Doesn't always happen, not in every setup, but all you need is a couple of these and you make your year. And so that's nat gas. If we do top out here and pull back and can settle on top of this square, it'll set up the next long and the next leg. I mean, from the monthly review, we're very bullish on natural gas and almost all of the commodities. So does this mean this is the all-time high? Forget it, short the hell out of nat gas? Absolutely not. This is just trading a leg. And it's what can happen. All right, let's look at the last market, one of the softs. Last few weeks, we've been talking about sugar and the bullish setup, and we've had a nice move up. But notice where we failed. 3 times we tried to get up above this full square, which several other times has stopped the rally in the past. So does that mean we're bearish on sugar? Or, hey, short sugar? Not necessarily. Depends on your time frame and your risk tolerance. All it means is these are decision points, right? Here, the decision so far has been it's not ready. It's not going to go. So the next decision point is going to be here if we pull back to the half square. If we hold that half square, what does that tell you? It tells you that, odds are it's going to make a big push again up here. And once you go up and test something so many times, the odds increase that, hey, you're going to bust through. It's going to go, especially when you got higher highs and higher lows backing you up on the way up. So I'm showing sugar like we're showing natural gas as a way of looking at, okay, what do you do here? What happens after you get involved? Or, if you bought it in here and it's failed here, what do you do? Well, again, it depends on your time frame. It depends on the instrument you're using. But you got to say, until we get through here, the upside's going to be very limited, right? This is the brick wall right now. But now the thing to look is, can we get a higher low? Can we hold the half square? If those two things are affirmative, then this market is one that's going to ready to bust, I think. Where are you with sugar, Barry?
Exactly the same place. I think there's a shot at breaking out and the potential move there, and balanced with the caution that, we're banging up against the old highs and the actual square level.
Mm-hmm.
And I think looking at my charts, we're up 90 or something up from the low. So, there is resistance there. It's not stalling for without a reason. So we have numbers there. So we're 180 degrees up from the low. I'm just looking at my charts in 2020, the April lows.
Mm-hmm.
And that's, it's serious resistance. But what happens when serious resistance gets taken out? So that's
huge moves.
This could go 2, 3, 4 points very quickly. But at the same time, we are at these levels and we're testing it for about the third time. So fourth or fifth time, if you count all those other ones in
right
last August. So it's an interesting spot. I think, if you like a little bit of risk, it's a good play. At least you know where the levels are. So.
And the key thing, and what I really like, especially with these commodities, is when you have these massive bases. Mm-hmm. Here, you've got a 6, 7, 8 month base, and it can break out and stay on top, because that's what you're going to look for in a breakout, right? Does it break out and stay on top? If it does, the moves are massive.
Mm-hmm.
It just becomes a stampede,
right?
And as Barry was talking about the news, generally it's because something has changed news-wise that finally comes out. So we'll get the breakout, it'll settle on top, it'll start moving, and then the news will hit, and then it'll really turbocharge it. So we're bullish long-term on sugar. From the monthly reviews that we really like sugar long-term. I just wanted to show where we are in the story, from picking up from this little breakout here on the half square that we bought. And so right now we're trapped and we're waiting to see,
and you can also trade the other side, Ben. I was just going to say, right? You can wait.
Yeah, you can wait for the breakout and the pullback. Yeah. Absolutely.
Yeah.
That's a matter of style and risk tolerance.
Yeah.
So that's all I've got. I want to wish everybody a happy Passover and happy Easter and happy Ramadan that's people are experiencing for this holiday weekend. We know that a lot of markets are at very important decision points. I do believe next week is going to be a critical week, just based on the amount of charts that changed levels this week as I was doing the full review. So rest up, enjoy your family and your holiday, and be ready, because I think things are going to get really, really fast next week.
Right. Thanks, Ben. Good job. And
anything else you're looking at particularly, Barry?
I'm looking to rest for a couple of days. We're doing this Friday, so we get Saturday off and Sundays off. So we're taking some time off with the kids. Excellent. And we'll get ready for next week. That
sounds good. Good show, and we'll see everybody next week. Good trading this week.
All right. Take care.
Bye.